All right, thank you very much, Mel. Yeah, Kris is joining us. Mike Apple's still off. Kris, we're talking about the markets. Thank you for joining us this morning. Not too early, I hope.
It's so fun to get up at 3:15.
Isn't it?
Yeah.
Isn't it? Isn't it? We're both lying right now.
Wow.
U.S. markets, they're going to open lower because of all that stuff going on with the U.S. and China.
Yes, and stuff, I think, is a technical term.
It is, absolutely.
Yes. U.S. China trade continues to dog markets. U.S. president doesn't really seem to be in any great rush to get a deal done, saying a couple days ago, rather, that felt like a couple years ago, that it'll get done eventually. They're not ready yet. We'll see how it goes. China also being a little more aggressive as those talks sort of drag on. Now, here's one thing we did see. The yield curve inversion between the 3-month bond and the 10-year bond in the U.S., that's when the long-term bonds pay lower rates than the short-term ones. And it doesn't mean it's going to happen, but historically it has signaled a recession. So that's got investors a little concerned as well. I'm also hearing that U.S. markets are pricing in potentially 3 interest rate cuts by the U.S. Federal Reserve by 2020. And while an interest rate cut is a good thing if you owe money, it doesn't exactly put a message out there that things are fine and dandy. So I guess we'll have to see how that continues to play out.
Any concerns up here about what's going on between those two, between the U.S. and China?
Well, yes, the U.S. China trade talks definitely on the radar of the Bank of Canada, and we are going to hear from the Bank of Canada today an interest rate announcement. Now, there is no change expected. We're also expecting to hear a little more optimism from the bank on the economy in general. A Bloomberg survey actually shows that we may not see any change in interest rates in Canada until the federal election or after the federal election this fall. The Canadian dollar a little lower ahead of the announcement today. It's sitting at around 74 cents, although oil is down by more than $1, so that could be pressuring our loonie as well.
All right, and one last note, Indigo having some disappointing numbers.
Yes, and we did hear from Indigo with earnings. We'll be watching those shares today. The company widely missed expectations as it swung to a nearly $40 million net loss for its 2019 financial year. Yes, and in the final quarter, Canada Post strike and less consumer spending getting the blame. Sort of interesting. So we're talking about a net loss of $36.8 million compared to net earnings of $22 million in the previous year. Revenue for the year dropped by about 3%, and then comparable sales, this is a key metric, that was down by 1.1%. So a rough quarter at Indigo, can only go up from here.
Yeah, hopefully it's not a trend. All right, Kris, thank you very much for joining us this morning.
Okay.